going on, everybody? Today we're going over Marvell Technology Group, ticker symbol MRVL. This is a request from one of the comments that I got from other past videos. Hey, can you do Marvell? I'll be honest, I don't know Marvell, but we will check and we will find a couple of things. Number one, we're gonna find the fair value of Marvell stock as of today, according to the book The Intelligent Investment, that was written by Benjamin Graham, which was Mr. Warren Buffett mentor. Number two, we're gonna find the price that Mr. Buffett will be a buyer if all the financial statements checks out, which is about 33% discount. And number three, we will go over the financial statements and actually read them for beginners, so you will see that it's not that scary and see exactly what Mr. Buffett is looking for before he makes a purchase to buy and hold basically forever. So with that being said, let's get started with Marvell Technology. I made this Excel to find any company that has two things that I need in order to find the fair value. I need earning per share, company name Marvell. Earning per share, I can find it in Yahoo Finance, which I did, 2.18. PE is a given in the book The Intelligent Investor, 8.5, you don't change that. Growth 25%, also you find it in Yahoo Finance. Times the growth and corporate bond, you don't change. And the next thing that you need to find is basically the AAA bond yield, which we will find after we will go over the finance. Current price today is 46. We're gonna find this thing, fair value. Maybe it's like $100 or 200 or 500, I don't know, or maybe it's 20 bucks. And the price that Mr. Buffett will be a buyer, which is 33% discount from here. So with that being said, let's go to Yahoo Finance and found exactly what we need to find. I'm in Yahoo Finance, specifically in here, financial tab, and we got three options and we're gonna go over each one of them. We're gonna read financial statements for beginner. It's super simple, do not be scared. Number one, income statement. This is what we're going over now. And for the income statement, I'm looking for a couple of things. I'm gonna take my calculator out, okay? I'm looking for two ratios, not me, Mr. Buffett, and I'm just doing, that's how we find companies basically. And if that method is good enough for him, it's a lot better than someone on TikTok telling you to go YOLO on Palantir, Neo, and Tesla calls. Even though it did work a lot in the last year. Either way, we need to find gross profit and net profit. That's it. Buffett is looking for 40% and up gross. That's a great company. And 20% and up net. That's a exceptional company. If you got 40 gross, 20 net, that company is doing superb. At least to start and pass the check mark in the income statement. So I need to find, first of all, the gross. How do I find the gross? I go here. Pretty simple. Gross profit. I'm gonna take this number 1371 and I'm gonna divide it by the first number on top, total revenue 2888. So 1371 divided by 2888, and I'm looking for a number, as I said, 40% and up. So let's click enter. Pretty good, pretty good, pretty good. 47% gross. Now a lot of those companies, you will find out they make like billions upon billions of dollars in gross, which they do, 3 billion in this case, 2.8, and then negative net, and that's not good. It means that they expand and then they get more offices and more workers and more I don't know, more and more and more, but they don't contribute. All that gross goes away. It doesn't contribute to the bottom line, and that's not good. So we'll see in this case if Marvell stock, same as other most technology companies or growth IPOs and stuff like that, or they actually have 20% net. So I'm going here all the way down, and I see a diluted net income. That's the number that you're looking for. Diluted net income available to common stockholder. We got 1.47. That's all. You take 1.1478. and you go back and you divide it again in the total revenue, 2888, and this looks like a pretty good number. I'm gonna click enter, and I want to see 20% net, 20% and up. So let's click enter. 40 something percent gross, add a little tax benefit, I assume, and whatever they made gross, they make net. It's like they don't spend. That's impressive. Thank you for the person that mentioned Marvell to me. I don't know what they do. I hope you guys can enlighten me. But that's all you need to find out in the income statement. As long as it's 40% gross, 20% net, unless it's groceries. For example, Walmart is like 6% net, and Costco, Kruger is like 1 or 2%, Target like 2.8, something like that. That's a different category. For the in general, 20% and up is ideal. Apple, I think, is like, I don't know, 38, something like that. 50%, nah, that's Coca-Cola level. Coca-Cola is like 60. And that's why Warren Buffett actually bought Coca-Cola like 50 years ago. He went over the financial statement. He didn't went over TikTok and listen to people telling him to go buy Nikola or Neo, Workhorse, all that nonsense. With that being said, let's go and comment below if leave a like if you actually bought one of those Neo, Workhorse, whatever the case, or you want to read financial statements and educate yourself to make yourself wealthy in the future. Not a financial advice, of course. Let's go over to the balance. I'm in the balance sheet. I'm looking for a couple of things. In the total assets minus total liabilities, I'm looking for the liabilities, and in specifically in here, in the liabilities, the non-current, meaning long-term. So you click total non-current liabilities, and this is what you're looking for, long-term debt. Long-term debt, 1.5 billion. What I'm looking for, or what Mr. Buffett is looking for, is that the long-term debt can be paid off in 4 years, or if a company that doesn't grow, that from their net income, which we found 50% net, pretty awesome. If from their net income they don't grow ever again, and they can pay off their debt just by what they made today, if it stays the same every year, don't go down, but stays the same, doesn't go up or down, and then can pay in 4 years or less their basically all their long-term debt, that's a check mark. So I'm taking this number 1554, and I divided. You go back to the income statement right here. There we go. Income statement. Scroll down again to the diluted net income, where we found the 50%. Why it's so important to have over 20% net? Because you can do so much. You can expand, you can pay long-term debt, you can buy other companies, you can pay dividend, buybacks, whatever. As long as your net income is positive, 20%, like not 1%, half a percent, 20% net, you good. So we got 1478. So I'm dividing this by 1478, and I'd like to see a number of 4, which means in years, 4 years or less. So let's click enter. 1 year. What is Marvell, guys? What is Marvell? What do they do? Because I'm starting to see a pattern here of an exceptional company. We're gonna find exactly the value and their cash flow ratio as well. 1 year. They can pay their long-term debt in a year. It's not 4 years, which is exceptional. It's like 1. Wow. That's other company that can do that. Yesterday I posted about CRM. They can pay their long-term debt in like a year and a half. Apple can pay their long-term debt in like 2 hours or something like that. 1 year. That's an amazing number. That's a lot better than CRM, which is also an amazing number, year and a half. And Mr. Buffett is he bought CRM. Maybe he will buy Marvell next. I don't know. But if he doesn't, I might as well buy for myself. So let's move on. And that's all you need to do in the balance sheet. Let's move on to the cash flow. That's pretty good. That's another check mark. That's all he's looking for. 40 gross, 20 net, 4 years or less to pay their long-term debt. That's not the only thing he looks for, but that's like stage 1 in his search. That's all you need to do. It's pretty good. So let's go over cash flow. In the cash flow statement right here, I'm looking for a couple of things. Number 1, operating cash flow. I want this number to be a positive, which it is. That's the money that they're making from the business itself, and I can see that they moved from operating cash flow 360 million, double the last 12 months to 700 million. So they doubled the money, operating cash flow, the money that comes from whatever the business is doing, software, SaaS, I don't know what they're doing, but they just doubled their sales in the last 12 months, which is pretty impressive. And next, I'm looking for this one, investing cash flow, and I want to see a negative number, but I see a positive number. That's not a good sign, so I'm gonna dig in and see what happened. Basically, investing cash flow means the money they invest, to expand the business, either purchase a company, whatever the case, expand the core investment of the business. So let's click and see what exactly happened. Cash flow 1 billion minus plus, so they did a purchase here. This is and that's it. It's not rocket science. Purchase of business. That's what happened. They purchased a business for about $600 million. They expanding. This is a growth company, and that number basically led to the positive number. It's not like they issue whatever. I don't know. It's not like they bought 10,000 offices, expanding in international, and added like 10,000 workers in 1 year. That's not that healthy. They actually purchased a business, probably to support whatever business that they do. I'm not too worried about it. Ideally, I would like to see a negative number, but it is what it is. So let's move on to finance cash. Next item, finance cash flow. I want to see a negative number, which I do, 1.3 billion. What is finance cash flow? That's the money that either goes dividend, which I saw that they're paying like 0.5% dividend. That's pretty impressive for a technology software company. Other than that, Apple is paying dividend, and that's just crazy. So finance cash flow, you want to see a negative. What are dividends, buybacks, paying off the debt, and that's basically it. You want to see a negative number, meaning they're doing more buybacks and more dividend and more paying off long-term debt and short-term debt, paying debt in general. And if you see a positive number, that means that they're doing diluted of shares and paying maybe less debt compared to all the rest, the dividend, buybacks. So you want a negative number. If it's a negative number, it supports the company, it supports the wealth of the shareholders, and it supports the growth of the stock price at the end of the day, theoretically. So we got a big and nice number, 1.3 billion. I like to see that. And let's see exactly what happened here. So they did issue debt. They did took on a debt of 600 million. Oh, look at this number. Repayment of debt. So they took 600, but they paid long-term 1.3 billion. That's pretty much. They pay a massive debt. I'm impressed. That's a great company. Usually you see the other way around. You see issue of debt 1.3 and repayment mostly zero, if not. In this case, and look at the year before that, issue of debt almost $1 billion, but they paid 1.25 billion. And before that, like 2 years ago, they issued debt 1.9 billion and they paid like 700. So they had like 1.2 billion debt left. They paid it here, but they took 900, and then so they have like 900 million debt left, and they paid out of that 900, they paid 1.3, but they took 6, so they have about, I don't know, $200-300 million left in debt. In a year or so, they're gonna be debt free. In a year or two from now, gonna be debt free. And if the last number in here support the fair value, which we're gonna find in a minute, this looks like a very good long-term hold. Not a financial advice, just Buffett, my opinion, not Buffett opinion, the Buffett way. Again, this is pretty crazy. That's good. Issued debt 600 million, repayment of debt 1.3 billion. That's great number to see. Here's the number that I'm looking for next. Capital expenditure 118. You take this number 118, and I'm gonna divide it. You go back, and I'm gonna explain in a minute what it is. You go back to the income statement, okay, and you divide that number again by the diluted net income, where we find a 50% net. Everything starts there. Everything, if the company is profitable at 20% and up, everything can be done. So you divide it by this number 1478, and I would like to see a number of 25% and below. What does that mean? That's a score for the management, how they spend their free cash flow, excess cash flow. If the number is below 25%, management spend their cash flow pretty efficiently, and they're expanding the right way, they're paying debt the right way, dividend, buybacks, all that good stuff that they're doing to support the wealth of their shareholders. That's a priority for them. If you see a number of 25 to 50, it's an average company, and you will most likely in the long run will get an average results. And 50% and up, I don't even have to tell you what does it mean, but 50% and up, you don't want to look there. Either way, I'm looking for 25% and below, so let's click enter. 8%. Again, comment below. What is Marvell? What are they doing? Because they just blew past all the check marks that Mr. Buffett is looking for, as far as I know, in the finance statements, to move probably to step 2, which is, I assume, go meet the company, meet the people, see the management, see how they work, and eventually actually buy like a gazillion dollars of shares in the stock. That's look at this, 8%. That 25, which is exceptional, 8%. Every dollar that they make, the management knows how to spend it wisely to expand their shareholders' wealth. That's what it says. That's basically what it is. I'm very impressed with this number. All we have to do now is find the actual price. So if the price $46 today is a good price to get in, according to Mr. Buffett, or wait and see where it should trade. So let's go to our Excel. Yeah, so I'm in the Excel, how to value a stock like Mr. Warren Buffett, and I found the number AAA bond yield right here, guys, 4.875. And basically, once I click enter, I'm gonna find two things. I'm gonna find fair value of Marvell stock, as well as the price that Mr. Buffett will be a buyer if all the check marks in the financial statement will be a check mark, which they are. So we're gonna find the price that Buffett will be a buyer. Maybe I should call him and say, hey, go check out Marvell, because everything checks out according to the book, and before I click enter, guys, if I bring you any value, don't forget to subscribe to my channel, click the bell notification, leave a like, comment, all that stuff. Leave a comment, which stock would you like me to do next. I would never do Marvell, and I'm very happy that someone commented, hey, do Marvell please, and I did, and I found like a stock that could be a pretty good stock, at least for my own portfolio. Do as with this information as you will after we find the fair value. If you want a piece of this Excel, link to my Patreon in the description below, where you can join for $10 a month. I posted this link about 2 months ago, something like that. All you have to do is have a positive EPS and a positive growth. If those two numbers doesn't add up, then, which most IPO stocks do not, then it's a problem. You need to do a discount cash flow formula, which I will do probably in a couple of I don't know, weeks or so. And with that being said, guys, let's click enter and find the fair value of Marvell stock. $115. $115. Look at this stock fair value, 115. We're at 46, and the price that Mr. Buffett will be a buyer is $77, which is almost double than here, like 80% from here. 115 is like 150% from here. The numbers don't lie. The numbers don't lie. If this is a great company and financially, eventually the price of the stock will catch up with the fair value of the stock. Eventually. Is it gonna be tomorrow? No. Is it gonna be in 5 years? That's a possibility. But that's the fair value. The fair value has an upside of 150% from it, like something like that. If you click, if you do the calculator, 115 divided by 46, 150%, something like that. Buffett is a buyer at anything around 77, which is also crazy. We got an upside there as well. If I bring you guys any value, subscribe to my channel. I wish you well, and I will see you in the next video. Thank you very much. That's pretty impressive number. Thank you. Yeah.